Hello friends, a concept that we have been listening for years together, that is tax havens. Let us see something about this in this episode. We know that every government has three roles to play. One is protecting the country. I call it as police state. Second is developing the economy of the country. I call it as development state. And third is ensuring the welfare of the people in the country. I call it as welfare state. For performing all these three responsibilities, the government has to spend. And for spending, government needs revenue. The major source of revenue of any government in the world is from taxes. Maybe direct taxes or maybe indirect taxes. So government tries to impose number of taxes. Government tries to bring in tax net as many people as possible. Government tries to maximize the rates of taxes. Government tries to collect information from the taxpayers and others in such a way that they can increase the tax revenue by charging more and more people, by charging more and more income. This is on one side. Whereas on the other side, the taxpayers try to minimize the tax amount that they are required to pay. Hence, they prefer less number of taxes, less rates of taxes, easy, simple and transparent procedure for payment of taxes. They want that they will be required to disclose less information so that their tax liability will be less. Such countries who provide all these things, that is less number of taxes, less rate of taxes, less or easy procedure, such countries in the opinions of taxpayers are called as tax havens. So there is either no tax at all or the taxes are very, very less. These countries, which are called as tax havens, provide minimum information to other countries, particularly to those countries from where they get the investments or they get the technocrats, they get the industry. Similarly, there is no transparency regarding the law of taxation or the procedure of taxation. These tax haven countries don't require the existence of companies in that country. The company which is earning the profit need not be in existence in that country, or the person need not be the resident of that country. So such benefits are given by tax haven countries, and taxpayers therefore are attracted to these companies and they try to see that they earn the income in those countries, or at least they can show that the income is earned in those countries so that their tax liability is minimized. Just to give few examples of tax havens, it may be Dubai, it may be Hong Kong, it may be Panama or Bermuda. These are some of the countries to whom we can call as tax havens. There are 4 different ways in which you can get the benefit of tax havens. Number 1 is residential status of the taxpayer. As we all know, the tax liability is fixed on the basis of residential status. And the residential status is of 3 types generally in the taxation laws. One is resident, another is non-resident, and the third one is not ordinarily resident. So the provisions in these tax havens are studied carefully by the taxpayers and they decide their residential status to get the benefit of tax havens. Second one, the taxes may be levied on the basis of holding of property. So, in the countries which are called as tax havens, the taxpayers study the provisions of holding of property. If holding of property in that country gives tax benefits, these taxpayers will hold the property in that country. Otherwise, they will simply register the company in that country and will have properties in other countries. The third way, the tax provisions of tax havens, for example, if required that the business or the trade or the industry should be in the country, then these taxpayers will form or establish the company in tax havens. But if there is no such requirement, then these taxpayers will run their company, establish their company, will do the business in other countries, and merely the head office will remain in tax haven countries. And lastly, providing the financial services. These are the four ways which will decide how the benefit of tax havens can be taken. Now, what is the benefit of tax havens to taxpayers? As we have already seen, there is either no tax or minimum tax, no disclosure of information and easy procedure. All this is beneficial to the taxpayers. The countries which are tax havens also get lots of benefit of being tax havens. One benefit, as we can very easily imagine, is they can attract the capital from outside countries. They can attract the talent, the technocrats, the technology from outside countries. They can attract the industry in their own countries. With this, production will go up, employment will be more, and the economy will start growing. This is the benefit to the tax havens. But what is about those countries from where all this flows out? They are put to an adverse situation. They are put to loss because from these countries the capital will flow to tax havens, the technology will flow to tax havens, the industry will flow to tax havens, and hence there will be a shortage of capital, less number of industries, less employment opportunities, less production, and this will be the restriction on the development of the country. Hence, the countries try to make an agreement with tax havens so that this outflow may be stopped. One more negative impact is that there may be black money generated, and this black money will go to tax havens by way of hawala and will come back as white money in the country of origin. All this is not good for the economy of that country. Well, this is all about tax havens today. Let us meet in the next episode with another concept. Till then, bye.